Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, July the 29th, 2025. As you know, today is Tuesday, Gary's Market Forecaster, GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, wave one is done. Is this three-wave ending? And wave two is done. We're ready to go breaking out. Or we're going to continue to make lower highs, lower lows, and push down toward our original target. Over 3 years ago, we were thinking we'd get a deeper retracement. Well, it's possible that's over, but I'm still, until price proves otherwise, going to go with a deeper retracement. So I am looking for a lower high, lower low. And last couple of weeks, we talked about this bottoming and reversing because we had the software showing that we needed a bounce. We had the daily, started to move higher with the bounce, and then we got the pull back into last week. And what did I say, Emil and others? Pretty good call. I even painted this Picasso where I said we're going to go from the slingshot down to a slingshot up so that we could finish this move in a beautiful A, B, C. And what's ABC stand for? A beautiful correction. So this is playing out, I mean, to the T. Where you paint the Picasso, right, Mr. Tucson? You paint the software what it's going to look like in advance. And sure enough, price held. So let's jump into the charting platform, and we can see that from the recent low to the rally as the daily and weekly started to reverse on the software. We talked about a high probability to bounce. We went on to say that pound dollar, euro dollar, I would not be buying at this point because I expect to pull back as the dollar bounces. The pound and the euro were going to pull back. And then even as we got this pullback into the sweet spot of 618786, I kept saying this doesn't look like the end of a correction and we're ready to make new lows. This looked more 5 waves, so this should be the A. Get my writing utensils out. And we talked about this looking more 5-wave bullish type of move. And typically after a correction, the correction should be in 3 waves. So this was likely going to be the A wave. And then we came down in what appears to be the B wave. And now we're working on the C wave. So we got a couple of areas of interest here. If we can start breaking above this zone, maybe we come up to this zone and then we get rejected. But if we start breaking above and reach up to the Magic Fibo up here, then the key is going to be from this low up to the Magic Fibo. Do we retrace for a 618 retracement, then go bouncing? That becomes very bullish. If we continue this rally, we go up to this initial resistance zone and don't make it to the Magic Fibo, and we come up here, get rejected. And again, you'd use this swing point low to that swing point high. So you say, well, Gary, all I see is a bunch of red lines. Well, you would use, using a 2.2, you would use the B wave swing point low And if we go up here to this zone, somewhere in here without reaching the magic Fibo up here, but we come into this resistance zone, and just say we come to the bottom of it right around that 100 area, and then we retrace and hold the 618786 zone, which is right here, as lines upon line, but you can see it overlaps these levels. So if we end up holding that, this would still be bullish, that if we go up here, get rejected from this former support turn resistance zone, that's why it's pink. I'm expecting that to act as resistance when we get up there, but we get rejected and hold and then bounce, then it says we're definitely going to go testing this magic Fibo. Got it? So we got a couple options here. Again, hint, hint, hint. I think the dollar is going to continue to grind higher. I don't think this is the complete move finished just yet. Amen? I don't think that's quite finished just yet. So keep buying the dips in the short term as the dollar should go up toward that upper 99/100 level. And if you take all the way this and you go from this recent low to the high in this retracement zone, which was the 618786, it tells us that when we start breaking back above the 618 from that high to this low, there it is. We closed above both of those. So this is screaming, we're going to 99.18. We came close, but not yet. And I have a 75% chance to reach that. We have a 70+% chance to reach 99, basically in 40 area. And there's your 1618 at 100. So hint, hint, hint. This played out beautifully, and I don't think this is the end. It's ready to go down. I think we're going to go up and test this 99 plus toward 100, and then I'm going to watch once we get there. Is that the end and we go breaking down? When do we get very bearish? Right now, I'm still bullish. But to get rejected in this zone, then come down, so the key level is going to be a couple of areas. We can use this swing point low to swing point high. That gives us another range of a 618786. But Mr. Tucson, James, Ian, Emil, if we reject here, we rally up higher, reject, and we don't hold this basically 9850 down to about 9800, if we reject and start closing below that, then we have a 75%. We go on the 96, make a new swing point low off of there, down here. And then if you look at the bigger picture, which would be this swing point low, you then would match that. Let me move this out of the way for a second. And then we would match this and say, okay, what if this ends up being the ABC? Then we look for the same type of move from that low to this high. We start taking out this 9770/9717. So we start basically this. If this is the A, the B, the C, we go up to resistance, we get rejected, price comes down, and it can't hold this 97 area. Basically, we come down and break this swing point low, then it states highest of highest probability, we're going to make new lows going down to 95.90, 95.40, new swing point low. Got it? So this was expected. Only question is, after this correction, are we going to hold a 618 retracement off of that to then go breaking out? Or we're going to get rejected and not hold the 618786 zone and start to set up the targets to the downside, 96, 95, et cetera, et cetera. Got it? So I'm still thinking lower high, lower low is the plan until price proves otherwise. Got it? But was this a great call? How about that? In advance. That's how you do it with the software. Why did we talk about this not only looking like a 5 wave initially, That doesn't look like that's the correction we're ready to go down. That's the part of the correction, but was the software. Love the software. We had a weekly hook, weekly cross, we had slope, angle separation, and that's why when we started seeing this and we got that little bit of a pullback, I was like, well, two things are screaming. And again, this weekly PAI hook, trend momentum cross equals a daily cycle. The software is so unique. When a weekly PAI hook and crosses, you get the lower time frame to cycle. So in the case of the weekly hooking and crossing, this daily should cycle. And I went through the explanation that red and blue made it up there, but money flow, the green line, which is extremely important, did not. And that trend momentum right here, trend momentum one made it, but that's not a cycle. You need all three of the PAI and at least this trend momentum one. And we had the trend momentum one close enough, red and blue close enough, but no cigar on money flow. So what does that tell us? That's why I went in and said with the weekly hook and across, the probability this is going to go from that slingshot down to slingshot up. So this PAI could finish its cycle. And I even drew this as this was turning over. I said, we're probably going to see this turn back up, trend momentum two, continue higher while we finish that up move, and then A, B, C. So when am I looking to sell? When the daily gets overbought and then hooks back down. You get triggers lower when that happens. You get triggers higher when it's oversold. We got oversold again. We got triggers higher. So we're looking for a trigger lower when what? When PAI gets overbought, trend momentum gets overbought, and then the PAI hooks down. Got it? So we can actually go into the charting platform in this trade management system, expert advisor properties, and you can put in your take profit, stop loss, etc. in here. But the key is, what are we looking for? We want to use a trigger short. So trigger long, turn it to false. Say, nope. I want a trigger short. Yes. Do I want a slingshot long? Not right now. I want it to finish that cycle, so I turn that to false. Do I want a slingshot short? No. I want to get it to overbought condition, so I'm going to make that false. So all we want to look for is a trigger short. Well, we don't get a trigger long until the PAI and trend momentum are oversold, and we're not going to get a trigger short till the trend momentum and PAI are overbought. So we can set this in advance. So even if this takes several more days, like through the rest of this week, for example, before this thing would get to overbought and then turn back down, would be where the trigger forms. So I can go in here and say, okay, and then click and say ready to trade. And this thing will sit in ready to trade mode for days. What if I'm on a weekly chart? It could stay that way for weeks to months. What if I do it on a monthly chart? That thing could stay in there for months to even a year or so. By the time, depends how soon you set it, and if you're anticipating for the full cycle to play out before the move down. So between Elliott Wave, the software, and the automation of this, where it automatically will enter your trades for you and manage them along the way. And when you reach your take profit, it moves your stop loss into profit, etc. It's a hands-off kind of tool once it's set and ready to trade mode, and then it'll trigger when your criteria that you entered is established. So in this case, slingshot down, slingshot up, we counted on that. Going back to the charting platform, this is why I used it. I kind of went through the pros and the cons. Pro of this going higher, we had a weekly and a daily reversing going up. So we definitely expected a bounce. Then Emil, the bounce started to look like five waves. Then we got a correction down, and it went from this low to that high, bring this back down to current price action. From the recent low to high, we went right within that 618786, this green box. And I said, based on this looking like a five wave, I think it's going to end up making a higher low, higher high. B, not only the five wave looked this, but we had that weekly hook and across, which meant the daily should cycle. And at this point, the daily hadn't cycled. It went from that slingshot down, which I then converted and said it was probably going to go into a slingshot up, and finish that three-wave correction. So if you'll remember, we'll go over the euro in a moment, but that's why I look at those things and go, this is a high probability. This does not look three waves. My weekly hook and across, my daily hadn't finished the cycle. So as you get that pullback, it's like, yeah, this is a good time to buy that dip because it's going to go up higher. Now I'm still expecting a lower high and then a lower low, but let's see how that plays out. And you know the mechanism to follow. Once we get that, we have this new swing point low here to the swing point high. It's going to be an overlapping area. So from this low to that high, you're going to get a 618786 zone. And then from this low to that same high, comes over here to be the duplicate, right? Then we have another 618786 zone that kind of adjusts. And a lot of times you'll get overlapping areas. So once we start retracing and we break below that 618786 zone, then you start targeting these extensions down low. And basically, the way this would work out, if this is my A, this is my B, we go up here in a C into the zone and get rejected. If we come back down below this swing point, then it manifests highest of highest of highest probability. We're going to make a new swing point low. 75% we're going to make a new swing point low. So Emil, all eyes are going to be on here. Let's clean that up one more time and show it. This is the A, the B, and the C. Hint, hint, hint. I don't think this is over till it gets up here. Another way of equality, typically in an A, B, C, the A wave, you get your B correction, typically will match the length of the first move. So you can use these little arrows. So from that swing point low to this swing point high is right at that size, right? So if we're going to get an equality move from this new swing point low, where should we go? And as you start to look at these lows, it's right at that resistance zone. All right, right around that 99 plus / 100. So this could be a perfect A, B, C correction followed by the next down move. And once we get the correction, it starts pulling down like we did over here. How did I know when we were going lower that I said highest probability we're going higher? Well, again, the weekly hook and across meant the daily was going to cycle. We didn't get that. And this first move up looked 5 waves, not 3 waves. So typically when you're in a downtrend, you need a 3-wave correction to the upside to set the tone for another lower high, lower low scenario. And that played out beautifully with the software and our ability to read and interpret price, God-given talent to read and interpret price on a chart. So in closing, this is not the end yet. We're going to go higher. We're looking for equality. Sometimes you get equality and you get a little more. So this zone from the pink box to where the Magic Fibo is still major resistance. And as long as this plays out, we get rejected. Then again, from the low to whatever that high is, you look for that 618786 zone. And basically, I just did it with the math. If I use this line, which is this low to that high, and we say, okay, we're going to go up here. Let's split the difference between the bottom of this box, the top of the box, and underneath the Magic Fibo. We're going to kind of split the difference and go to about 100.5, 100.5. So from this low to that high, look where that 618 is. Look where my 786 is, right at this swing point low. So Emil, we rally up here, we get rejected, we come down, we break that swing point low from here. What is that telling me? 75% chance we're going to make a new swing point low below this 96 and change, make a new swing point low and go down to 95.80, 70 plus, we're going to go to 95. Amen? All righty. So that's extrapolated to our Forex pairs. And what did I say about this? I was like, during this period, the same thing, but the inverse. What I love about the euro dollar, it's part of the US dollar. So when the dollar index goes up, the euro dollar goes down. Inverse relationship. So when the dollar goes down, the euro goes up. The dollar goes up, euro goes down. And remember what we said here weeks ago? I would not be buying the euro dollar right now. We're looking for a correction. And then after this bounce, and we were in this resistance zone again, I said the same thing. I would not be buying this because this looks 5-wave A, and that would be my A. Then this rally into the zone was the B, and that's in the archives. And we're looking for the C wave down to come somewhere in this 114 probably, maybe 113 area. Well, we do the same kind of thing we just showed you on the dollar index. This, if this is the measurement of the first leg, and this is the correction of the second leg, we're getting close for equality, but sometimes you do get an extension. So I won't say this is the end because I think the dollar is going to go higher. The dollar goes higher, the euro goes lower. So I'm still looking for a little something to the downside. But I'm still looking for a buying opportunity of buying that dip. So you come over here to the euro dollar, and we're doing the same thing. Go into your expert advisor to set it the automated trade system and say, okay, we want you to buy. So you put in your stop loss, take profit. And this one, we're looking to buy the trigger long. The dollar index, we want to buy the trigger short. So when it starts to top and head lower, the euro is going to be inverse. We'll be bottoming, triggering higher to go long. So that's what I want. I don't want to trigger short in this one on the euro. I want that on the dollar index. A slingshot long, slingshot short. Not in this trade. I'm looking for this to bottom, 3-wave correction, then a reversal. So wait for the daily get oversold, waiting for the daily get oversold. And then when we do, we're going to buy that dip. Once you get these triggers higher, when what? Trend momentum's oversold. Down here, oversold, you'll trigger higher. When you're overbought, you trigger lower. Overbought, trigger lower. Overbought, trigger lower. So what's next? Oversold, trigger higher. So you just click ready to trade mode. And this baby will stay in this ready to trade mode. Remember, we kind of set this, and of course, this is my demo, but my live account I leave running, and I set my computer to not sleep, never sleep, so it stays active. This thing I said would probably take us through end of last week, going into this week, and we probably still might be into the end of this coming week. But this ready to trade mode can sit here for days, weeks, whatever it takes. And when we're oversold and we turn, we're oversold, and this PAI right here hooks up like this. When it gets oversold and we get a reversal and the PAI hooks, we get oversold, we get this one oversold, this PAI, price action indicator, the powerful AI hooks, it'll enter the trade, and we look for this bounce and a continuation. So just like we talked about down here when we started bottoming around that 102, great time to get in, go to Magic Fibo. Then from the recent high to low, we broke that 618786. We gave us the targets at 113, 115. We got another correction. We did the same thing, targeting at 117, 118. And onward and upwards we go. Now we're waiting for the end of this correction to do the same. So just as a reminder, come over here to the euro. I'm going to bring this back to that prior swing point, which we discussed in great detail. And that was this swing point high to that swing point low. When we crossed this zone here, we said we had a 75% chance we were going to go up to 137, 115, 113.70, 115. And remember, while we were down grinding in here, I said, you should be going long. There's a great opportunity to go up at least to the Magic Fibo. And if we break it, then it sets the tone where I said weeks in advance, set an alert. Euro close above 108.50, then go long and shoot for 113.70, 115. Hundreds of pips later, we got there. Then we got a little three-wave correction coming back down, and we said the same. From that new high to the low, we broke that 618 again, 786 zone, and we said, what? Well, we're going to start targeting 116, 117, start moving toward 118, and that's exactly where we went to. Now this looks like another ABC continuing to play out, so I would not be buying the euro just yet. I think it's going to go lower. As the dollar finishes that up cycle, the euro finished the down cycle, and then we're going to look to buy the dip. And that's what this is referencing in the software, that we're on the euro dollar daily chart, and my trade management system set ready to trade. And I'm going to leave it there until it reverses and triggers and come back. You'll be in the trade, you'll be up some pips, and you'll be in a position of authority. That's the plan. Pound dollars, ditto. Expecting this to go lower. The weekly's hooked and crossed, steep slope angle separation. My daily's finishing the down cycle. And remember when we talked about this last time, Emil, that this was already in oversold territory where the euro was not. That I said I'm expecting the pound is going to go up here and slingshot lower, and this will turn back over and we'll get that push lower while the euro's setting up. So I expect to get the pound PAI hook at the same time the euro gets a PAI hook, and I'm looking to buy that dip to go higher. And you do the same thing here. Set the software to buy. So go into Expert Advisor, go over to Properties. And again, you want to do the same thing. All I want to do is buy a trigger long. Don't want anything else right now under this particular circumstance. And you go to your click to trade, go to ready to trade mode, and this baby will sit here for several more days, whenever it takes for this thing to finally pushing lower. PAI hook, this will be oversold. And when the PAI hooks, you get a trigger higher, like those guys right there. See the triggers? When what? PAI is oversold, trend momentum's oversold, and the PAI hooks, bingo, trigger higher. All righty. So that's a couple of trades setting up in the mix and with a high probability. And the key is going to be when this finally does hook and go up, I'm going to get to a position of authority as this starts bouncing and going higher. I'm going to be sure I'm looking at this process and I get to a position of authority in case this daily goes up again and slingshots lower, just like that little bounce. Bounce a few hundred pips, and then we got a slingshot lower. So when we're in here, you get to your position of authority. So if it does reverse, you make profits, and then you get pipped out for more profits, and then you rinse and repeat and start over. But we peg this beautiful move, 17 plus 100 pips from this low to those targets. And when we look at the charting platform, it was the same thing, rinse and repeat like the euro. We did it on the pound, and from the recent high to low, we talked about that, and we said even way over here, high probability we're going to go up hundreds of pips to reach the Magic Fibo. And then before we started to reach this 136, 137, what did I say it would likely do? Break the Magic Fibo, come down and retest before we got up there. Thing of beauty. Now what? Now we're looking for this three-wave correction to finish to buy the next dip. But we said this weeks in advance. Set an alert. You close above 129.50, go long 600, 700 pips to get to 136.20, onward and upwards toward 137. And sure enough, what did the pound do? Went exactly there. Boom. How about that? So salivate country, as we expect this to continue lower, then we're going to buy the dip. Amen? Everybody good? So we got the software set. We're getting oversold, ready to trade mode, and I'm looking for the coming weeks as this comes down and reverses, this comes down and reverses, and we get that higher low, higher high as the plan. All right? All righty then. Let's continue. What about the dollar yen? I did say as the dollar yen starting to go up, we're probably going to get a little something left. So I'm looking for this in the coming days, just like the euro dollar, I'm looking to buy the dip. Pound dollar, I'm looking to buy the dip. If you're trading the dollar index, I'm looking to sell the rally. And now with the dollar yen, I'm looking for the same, that as the dollar grinds a little bit higher, I suspect this is going to grind a little higher. And then we end up with this, looks like a three-wave correction, kind of time-consuming three-wave. And we're probably going to get one more push. So if the dollar does what we expect it to do, lower high, lower low, then I expect the dollar yen to do a similar type of lower high, lower low. All righty? So could we set the same thing up and set the software on this dollar yen to sell the rally, get to a daily chart, let it get overbought when it hooks down, enter the trade short? Yeah, but I would not be going short here. I think it's got a little something left. And the bigger picture is from the recent high down to the low, we're just kind of grinding toward that 618786 zone. From the previous one, we had a high, low, lower high, double bottom. So even as we're rallying back in here, this looks like it's going to do this, go up into here, then come back down, more than it's going to do this to go breaking out. Only way I see it going this route, if that dollar starts breaking the Magic Fibo and we start breaking out, and that wave two is over and we go breaking new highs, then absolutely I'm going to expect this dollar yen to go breaking out. But I don't think that's the case. I think this is going to end up being another push lower. And the dollar is going to make a lower high, lower low, and force the dollar yen to do the same. Pound yen, we're looking for the same type of move. And technical picture looks like this big move down, all this overlapping, chopping, grinding, grunting action wants to give us the another wave down. So if this is an A, all of this chopping is a B, then we should get a C coming back down somewhere around these lows and make a new low. And the arrow scenario is the length of this arrow. Once we finally top and reverse, we should get a similar type of move lower. So this is setting up. I'm waiting for price to prove itself. So Mr. Tucson, how do we know price is getting ready for a breakdown? Well, the recent low from this, let me get my 2.2, from this recent low up to the high, which is that little spike right there, we would expect at some point, if this is the end, when we start closing below that 618786 zone, so if this is current price action, this would be the zone in this area. And if we start coming back closing below this, then it sets the tone that we have about a 1,000-point run down. We start closing below 187. We're probably going to go toward this 177, 175 area. Looks good. Question is this over? Or are we going to go a little higher? But again, this is part of the danger zone. From that high to this low, all we're doing is climbing in the 618786 zone. That's this pink box. And we're struggling in this area. What did the pound yen do previously? In that area, struggled. In that area, multiple times, struggled. In this area, struggling for days and days and days and days. So this isn't looking real bullish at the moment. It's looking more bearish at the moment. Amen. So this is struggling. So what is that likely to do? Well, they're likely headed down this way. If you're conservative, it's going to take us a few hundred pips to get the obvious nod, but it's a big nod, right? You start closing below 190 and you start targeting 182, 180. Or if you're a little more conservative, you wait till we break 187 and we start targeting this 180 slash 175 area, kind of a sweet spot around 178. Looks good. All righty. Let's continue. Got a trade I'm looking at. I'm going to give you that today. No buy, sell to hold recommendations. I'm not a certified financial planner. I simply give you an idea of what I'm doing and what the chart's setting up. But there's one on the Magnificent Seven that I look for as a great opportunity, and we'll discuss that in a moment. But let's pick up with SPX. We just keep grinding. We reached the 6350 area, which remember during this reversal, when every naysayer out there during the Trump tariff talk, well, tariffs are going to cause inflation. It makes people pay higher prices. It's doom and gloom. Well, we expected a correction. We expected it. And there is your A, B, C. Plus, we had a weekly reversal on the software, same kind of thing. It's set up beautifully. And at the point when we were at this high to this low, we talked about at least getting a substantial retracement back to that 618, 786 zone. Well, we not only did that, but we broke above. Then at this point, we were 75% likely going to 6350. All-time highs, yep, we're there. Well, Mr. Tucson, we had a high probability we need some sort of correction, but this punch junk euphoria can continue. Next up, right around that 6,500 zone. We still got a high probability we're going to reach there. So I do think we're absolutely going to get the 6,500 zone. But do we get some sort of three-wave correction first, then we go popping? Or did we just continue this insanity grinding higher? Well, that's why I like to show a little caution, because when you do the low high and you start reaching those extensions, at some point you need some sort of retracement. So the last week or so, we talked about if we do get the retracement, I would at least expect a retracement back to where we broke out from to potentially bounce there and go on upwards to where that 65, or we can just continue to go higher. Well, what is this week that could set the tone for that correction down? It is Mr. JP himself, and that's the calendar. And I have it on this, well, let me pull up this one first. I have it on this calendar, and it is the FOMC announcement on Wednesday, tomorrow. There's a 98% chance he's not going to do anything as far as raise rates, cut rates. 98% he's going to leave it alone. Well, there's this tool we use in our charting platform, and I'll pull it up on this chart. Let's see if I have one. No, I guess I'll just pull it up here. And that is what we look at is the DGS2 two-year maturity rate. And then you add to that the Fed fund rate. So we click that and this chart, and then you do your toggle over here. And this chart, I'm going to make this a little bit brighter color so it stands out. Inputs 4.3. There it is up there. So let me bring this down so you can see what this is. This is the Fed rate up here. current Fed rate. So we're between 4.5 and 4.25, kind of blended together about 4.33. And the current rate, 2-year maturity rate, sitting basically about 3.9 to 4 area. We've been in this zone. So the reason I don't think he's going to cut rates, if we're here, that's the current rate, and he cuts now from 4.5 to 4.25, he goes from 4.25 to 4.0. That would put us right around this 4.1, right? 25 basis point cut. And we're sitting right here, right around that 4.39/4 area. This has been a little no-no already. Back when they cut rates here going into the election, the rate crossed above the Fed rate and it made him real nervous. It came down, dipped above, and then it went down. That's why he's been holding it steady ever since, because he freaked out on that. So what does this big picture mean if you've never seen this chart before? You think the Fed decides on the rate policy. They don't. They're a chaser, and they're usually too late. Too early, too late. But you go back to, bring this even years back, what happened here when the Fed rate was above, and we actually got a little bit above the Fed rate for a period. Not good. What happens? Boom. And that was the dot-com bubble burst. Next time, 2007 financial crisis went down. So what does the Fed do? When this 2-year maturity rate goes up, the Fed chases it. When the 2-year maturity rate goes down, the Fed chases it. And it just rinse and repeat. So bringing the back to current price action, why we believe he's probably not, as even the books say, there's only a, 98+% chance he leaves them unchanged, that if we cut rates from where we are, that's going to put us right at the rate where we are. So what would that do for him? If he cut rates and this baby goes up just a little bit higher, then he's going to have to go, okay, we cut rates, now we got to raise rates. So if this blue starts running off, the Fed's going to have to raise rate. The blue rate starts tanking, the Fed's going to cut rates. But for now, we're too close. If we cut rates, we're going to be right at the current rate. And that made him real nervous. And I think this is a political move. He cut rates going into the election. And then now, after the post-election, and rates have been dropping a little bit, he left them alone, but this is what scared him. When he cut rates here, this baby went surging higher. So let's do the math again. Emil, we cut rates, we come down about 4 and change, 4.1. And historically, when he cut rates here, this baby went popping. Then he cut rate again, it went popping another time. So he knows that if I cut rates, we're going to be awfully close to the current rate. And if it goes popping, it's going to go higher than our rate. And then that's going to force me to have to raise rates to counteract it. So this is why I don't think he's going to raise rates. And you go back to the calendar, and no surprise, the expectation is to hold rates the same, right? Current, expected. So what's it going to physically be? I think he's going to hold rates. Curious to see what he says. So this might stimulate, especially with all the news media talking about, well, is Trump going to fire Powell? Is he going to do this? And how he's been saying he needs to be cutting rates, cutting interest rates, cutting interest rates. Well, I don't see him doing it. And this DGS2 chart says he's probably better off not doing it. But the markets might sell off if he leaves rates alone. Because of that fact, they're kind of expecting it to be a rate cut. But this picture does not say we have enough room to even do a quarter cut. You cut it a quarter, you're right at the current rate. And if that baby does rally above, then what's he going to do? I know he freaked out in these two little incidences where we went above the Fed rate, we dipped, we went back above. That's why he's been holding steady the last few meetings. Amen? And look at this. We even drew this a long time ago when it finally goes sideways for a period and this started to move lower, but we still have a problem. Look at the correction. That's a three-wave correction. And now we have a low, high, higher low. So just looking at chart patterns, this looks still somewhat bullish for this thing to go higher. So you cut rates, this baby starts going higher. Uh-oh. So we're going to go from let's cut 25 basis points and then we'll have to raise rates, raise rates, raise rates, especially if this 2-year maturity rate starts to take off. So not many people know about looking at this, but this is absolutely what the Fed does. They do not just lick their finger, put their hand in the air and go, okay, based on the breeze today, oh, we'll cut rates today. When the 2-year maturity rate's dropping off a cliff, they cut rates. When the 2-year maturity rate are ripping higher, they raise rates. Got it? All righty. So that's why I believe he's probably going to leave them the same, which based on this charting platform and looking at this scenario, if they do cut it, it's going to be right at the current rate. And if it goes just a little bit higher, he's going to be underwater and probably have to raise rates. And this three-wave correction this way, and now a higher low, higher high, holding that 786 zone, still looks a little bit more bullish than bearish. So yeah, I think he's kind of stuck. And the reason I'm bringing that up, if he leaves rates alone, knowing the expectation is that they hope we get rate cuts because they'll bring down interest rates, this, that, and the other. But the markets might be disappointed in this and get that correction we're looking for. Okay, so back to the chart and back to ES and SPX over here. That let's play it out just like we expected. We broke above the 786, 618. And where were we going? Highest of highest probability. I said that weeks and weeks ago that we were going to continue to grind up, S&P grinding to that 1448 level. And even before then, during a reversal, we expected to get a retracement down to 6-1. That's Bitcoin, but we go down through here. We go through all of these. And we expected since that April reversal, we were going to get this to start going back and showing signs of going much higher. And that's exactly what we got on the charting platform. So we're there. Typically, once you start to get to your extensions, you typically need some sort of correction. And that is, you typically come back to the place in which you broke out from. And if that doesn't hold, you typically come down to the Magic Fibo, then bounce and go higher. So I definitely think we're going to go higher. 65 is in the target. Maybe we expand this out and go real feisty toward that 69 level. But I'm still watching this very closely, knowing that we could get the pullback we're looking for with FOMC tomorrow. If it disappoints and he says, nope, we're leaving rates alone, and I don't foresee cutting interest rates this year because of, he's not going to tell you that, but because of this picture right here, well, until this 2-year maturity rate goes much lower and probably needs to break below this last swing point, so around that 3.5 area. So if we see this blue line go down and break a new low, then I think he will cut rates. But while we're chopping in this zone so close to where he would cut 25 basis points, I don't see it happening. But if his jawboning says that I don't see us cutting rates like even the rest of this year over the next several meetings, I don't see us cutting rates, then I think the market could sell off on that news. because they've been changing his plan. Well, we're going to cut rates 3 times in 24, and we're going to cut rates 3 times in 25. And how did that work out? Nada, nil. So you see, keep saying. Then the last time it was like, we're going to cut rates 2 times this year. Well, if that blue line starts going higher, he's going to go like Ralph Cramden, humming, humming, humming. I'm going to have to raise rates if the blue line starts going higher. So that, just this jawboning and changing the conversation, we're going to cut rates 2 times the remainder of this year, to nope, we're not cutting rates at all. I could see the market selling off. Then we have something that again is software related. You come over here to our markets and we look at the S&P 500, and we're extremely overbought on the daily. We're extremely overbought on the weekly. Still up. It's extremely overbought. It's not hooking or crossing, but it's certainly overbought. So you got a daily, weekly, even a monthly is an overbought territory. No, it's still up, right? This is what people ask. Well, Gary, does it always have to be oversold where you get the PAI and the trend momentum hooking across? No. Even this, Emil, right there, that PAI hook, steep slope, and this little cross is still a monthly hook, monthly cross. So what did that tell us during the tariff talk when this baby dipped down and we had the tariff low? We got a monthly to hook and cross. So what did that mean? The weekly was going to cycle. And what did our weekly do? Cycled. So ideally, you like to see it, the trend momentum PAI, get way oversold like down here, but you don't always get that. But it still is a hook and a cross, whether it's doing it from this juncture. You know, we got a dip here, a dip there, and then we got a PAI hook and a trend momentum cross. We had slope angle separation. And what did that mean on that weekly chart? If you draw a line back here during that process when that weekly did that, right? Here's an example right there. When, let me slide that over just a touch. When this baby reversed, it went from a slingshot down to slingshot up. And what did the PAI do? PAI hook, steep slope, trend momentum, green above the red, angle in separation. So from that little pullback to, what is this? This is a daily cycle going up. And even as it started slingshot, the daily started slingshotting too. But check out the daily in that scenario. So you go to the daily, you turn your auto scroll off, and we go back in time to find that red line. And lo and behold, Mr. Tucson, what did it do? PAI cycle, trend momentum cycle, boom. And then as it cycled, it started slingshotting higher and higher and higher and just kept a grinding. So no, you don't have to have your weekly oversold to PAI hook and cross. It can be along the way, like over here. We were kind of halfway down, not even halfway down, and this baby hooked, it crossed, it had slope, it had angle separation, boom, buy the dip. So we said the same thing over here. Buy that dip. Now we're getting to the extension up here, so it's time we probably get a little bit of a pullback. Amen? All right, so in closing, I do think we're going higher. I do think we're going to reach, whether you're looking at SPX, next target up, 6,500 zone, another 100 and plus points. But could we get a correction in here before then? All I can say is, my friends, we get that correction coming down. Maybe it's stimulated by FOMC because he jawbones and said, we don't see cutting interest rates this year, and the market gets disappointed and we get a little sell-off. Any big sell-off should be bought, and your target will be shooting at 65. Could we just keep grinding straight up? Yes, it's possible. And unfortunately, the market can continue this insanity going higher and higher longer than you can say solvent in your account. So this is why I'm being cautious. I'm not loading the boat on puts. I do have some protection on IWM. We're going to go over that again. I do have some protections out into September. And if the market gives us that correction we're looking for, great. If it doesn't, it's insurance for my portfolio. Why am I not doing it on SPX? Because this thing hasn't shown any signs of pulling back yet. Just kind of keep going, keep going. Next target, 65. But if we do get that little pullback, buy the dip, and it could be fairly substantial. Imagine if we just pull back immediately back to the 61 area. That's where we broke out from. And we're sitting at 61, and then we buy the dip, and that's a good 400-point move back to 65. Okay? So caution that we're probability wise, the probability, we need a pullback. We haven't seen it. Got a little 20 simple day moving average. And I think if you put one on the chart and put a simple moving average, 20 day, we've been above it for like 65 days. We haven't closed below. And this isn't a 60, that's probably something different. Let me see if I can go in here and do the 20 day style coordinates. That's the wrong line. Let's see if I can catch that. See what this is. Can I catch it? Moving average input. Yeah, that's not that. So we want to do a 20 day. Go up to a 20. Okay. But when you look at this, we haven't crossed this 20-day moving average and closed below it a long time ago, since way down here in April. You can see that's a 20-day simple moving average, and we came close, but we still closed above, came close, closed above, closed above. So I think it's like 65 days today. That could continue to go longer. I think the record is like 100 and whatever, maybe continue this thing. But at some point, pay me now, pay me later, we're going to get a correction that crosses below this 20-day simple moving average. Amen? Do we get up to 65 before that happens? Do we do it now and then get up to 65? Bottom line, we're going to reach 65, and any big dip should be bought, especially if it's Powell related and it's just jawboning. We get a nice hearty sell-off toward that 6160 area. If we don't hold the 6160 area, which is the prior breakout, and we come down, maybe we reach that to bounce, or if we don't hold that, you got your Magic Fibo that is sloping upwards. So each day this thing will keep grinding, and we do a little three-wave correction. We don't hold the 6160 and we come a little further, then this would be a great buying opportunity. Even at 61, you're talking about 400-point run. If we come down around 6,000 or even in the upper fives, then you're talking several hundreds of points. So buy the dip in the longer term. Just be careful and don't expect this thing to just keep going up every day like it has been for quite some time. I've been looking for that correction. We got some small insipid ones other than this big one here. That was basically the tariff talk. But we talked about this, same thing. Man, we need a correction. We finally got it. Didn't expect it to be so dramatic and so quick. But needless to say, we got that correction. So look at that run since then, that V-shaped recovery. We're going to need one. So is it FOMC that initiates it? Do we just continue until we get Elizabeth, I'm coming to join you, honey, that initiates it? But pay me now, pay me later, we're going to get it. Go out to a monthly, and you go back to 2009, financial crisis bottom. After 2007, we got a bottom, and we have not had a 618 retracement since 2009. So when Elizabeth, I'm coming to join you, honey, does come into play, projected sometime into 2026, somewhere around there, maybe late this year into 2026, we should get some sort of 618 retracement. So I've been saying before we break 7, we're going to break 4. And the only Magic Fibo below 4,000 is the monthly, which is sitting right around that 35, a 50% retracement. Amen? So I still say we're going higher. Yes, we could get a correction to go higher. I don't think this is the top in reversal just yet, but eventually we're going to get it. And at some point, we got to come visit a 618 off of what? The swing point low in 2009. Substantial correction. Elizabeth, I'm coming to join you, honey. Here comes the big one. Fred G. Sanford and Sanford and Son. That's coming. Probably late this year, early next year, but until then, expect more of the same. Keep grinding. Got it? All right. Well, let's look at those that trade futures. ES is doing pretty much the same move. I'll stretch that out, move this over so you can see what we've been looking at. We reached the first extension. We're trying to grind toward the second extension, basically similar to SPX. The numbers are just slightly different. That's due to contract rollovers, etc. But we're due for some sort of correction, right? We're due for a correction. And is it now? We may get this smaller correction. And likely, probably going to look like this, Mr. Tucson. As you drill down, this looks like, no, I don't want that. Let me go back to this. I don't want that. I want my arrow. Let's get my arrow. So this looks like an A. This looks like a B. And it looks like we need a C. So be careful. I'm really not looking for this to go blasting off necessarily. I think we need another little push lower, at least toward the 1 hour. Last time we touched was back here. We came down, bounced, to then continue this grind higher. And now this looks like a 5-wave type of move. And this would be my A, B, and likely going to decline a little further in the C to, do we hit the 1 hour again, Magic Fibo, and then bounce? That's part of the software, this beautiful Magic Fibo. And do we come down here to bounce? Or do we go even a little bit further? Check out the 4 hour. We haven't visited the 4 hour Magic Fibo in an awfully long time. We came close back here in June, didn't quite reach it. Keep going. We came close back in here in May. So the last time we actually touched the 4 hour Magic Fibo is back during the tariff talk decline back here in April. We broke below, tested, even went lower, and then we finally broke above, retested, and started the big run. All right. So are we definitely going to pull back all the way to where this Magic Fibo is now, about 6,200? That's still quite a ways away. Let me zoom that in so you can see what that looks like. That's still quite a ways to go that far, but this ABC should put us in the nature of this 1 hour Magic Fibo. So somewhere around that 63.90, 63-ish. So I'm looking to be a little bit more bearish until then. Then we'll see, do we come down here to bounce, or do we come through this, retest it as resistance? And if we see something like that, Mr. Tucson, we come down, we break the 1 hour Magic Fibo, we rally back into it, fail, then this would put us down into that 62-ish level, which would be what? My 4 hour Magic Fibo. So if we see the 1 hour break remain resistant, then we're probably going to come down even further. But in the short term, We should break this swing point low, make a new low, seeking out roughly around that 63.80-ish, which again is the 1 hour Magic Fibo. Everybody good? All righty. So if you're a futures trader, I'd definitely be thinking about the short side for the short term and that little ABC correction. What about the NASDAQ? Still kind of grinding higher into the scenario, but it too is looking like we need some sort of correction. And we came down in 1 hour. We've been grinding higher, probably likely. Well, this was a little bit different. We made a new swing point high on this one, where on the ES we did not. We made a lower high, lower low. Well, this is making a higher high, but it still looks like an ABC. What is the difference in this? When the B wave goes higher than the initial move, that's an expanded flat correction, not a flat correction. So this is still screaming. We're coming back to the swing point low, and we're headed to the Magic Fibo somewhere around that 23.4 area. Okay? Any questions on that? That's just reading, interpreting the price on a chart. We need some sort of correction. So does that mean we just have to go straight down and drop another 100 points today? Maybe. But I would not be surprised to see that high, low, get a little 618 retracement failure, and then a continuation down. So what do you do in that case? Emil, you take the swing point high, you come to the swing point low, and it's possible we just keep going down to here, but we may get a little bounce, do some sort of 618 retracement from the high to the low, fail, and then we go down. And notice if that's the case, say we start finding support here, we get a little retracement, you use your 3-point tool, high, low, lower high, and look at that perfect symmetry. You typically come down to at least a 1272, and a lot of times you'll get a little extension down at a 1618, but that's right in the middle between the 1272 and that 1618, right where that Magic Fibo is sitting. On the 1 hour, that is. So be careful. Will not be buying, looking for this to go popping. I'm looking for this to go down first. And then is this the end? And then we continue with the punch junk euphoria? Or is it Powell speak tomorrow that maybe we grind down in this area and we start getting in this zone by tomorrow? And then the Powell speak sets the markets for disappointment. And what if we break the 1 hour, retest it? Then we're expecting another push lower. And what would my target be? You go to your 4 hour. And it's down here, about 2,300, 23,000. So several hundred points. So big difference in where my 1 hour Magic Fibo sitting versus if we break it, retest it, then we're likely coming down toward the 4 hour. And again, this baby's sloping upwards, as you can see. So if it takes a few days to grind and grunt down there, maybe we intersect somewhere around 23, maybe 23.2 area, which is still several hundred points. So be careful on that. We've been grinding until oblivion. We need some sort of correction. And we might get what we need tomorrow with Mr. Powell speak. And on the shorter term, I highly anticipate we're going to come visit the Magic Fibo on the 1 hour chart. IWM, I'm short IWM in a put. I did a put spread. And then when this baby rallied against that put spread, where I bought the, was it the 170? No, I don't remember the numbers. I told you a couple of weeks ago. Well, anyway, when this baby rallied back up, I ended up closing where I sold this for credit. I closed it for pennies, and then I took all that profit. Now I'm just straight long put, and I got puts on IWM out to September. I'm expecting this baby to go crumbling. Let's go to a daily. This is in danger zone, big time. It is bearish, bearish, bearish looking. From the high to the low, all we were able to do is grind into the 618786 retracement zone. So we're looking for a big push lower. I made a statement. Everybody gives a prediction, but I leave that for the prophets. Everybody and their brother, the weatherman, this person, sports people, my prediction, my prediction, my prediction. I'm sick and tired of hearing gurus and everybody say my prediction, my prediction, my prediction. So I say my anticipated move. And just like I said on ES, before we break 7, we're going to break 4. Well, with this one, before we break 260 and go higher, we're going to break 160 and go lower on IWM. And this looks like the initial move, and we're looking for that A, B, C type of move. When we get it by September, well, I don't have to get it way down here below 160. All I got to do is get it anywhere near, start breaking the Magic Fibo and lower, and then that put starts profitable. And if we can get down to this 1618 retracement zone, that would be heavily in profit. And then I'll look to what? Close it for profit. Then if we get the end of the year blow off top, which would be a big pullback down here and another rally back to the zone, and then I would push this out to like 2027 or so and do another put spread. Speaking of put spreads, here's an opportunity. No buy, sell, the whole recommendation because I cannot tell you what to do. But you come down here into Apple. Apple looks exactly like that IWM. It's been grinding, and we got this wedge formation and just a grinding and an overlapping. And we have this big move, correction into this 618786 zone, finding resistance, and we're looking for another push lower. So there's some low risk, high reward, high probability setup. Push out to December 19th is what I'm looking at, and buying a bearish put spread where I buy, say, the 175 put, sell the 145, or perhaps buy the 180 put and sell the 150 put. But I'm looking for this to go lower. And if we get the correction we're looking for, this thing could turn out. But this looks extremely bearish. You retrace, getting chopped and grinded in this area, which is typical of topping action. And we should get another push lower. So I give it out to December, so it gives us plenty of time. And when I was checking that, it was like $200+ per contract risk to make over 20, I think it was like 2,700. So risk 200 plus to make 10 times that, 10 to 1 ratio. I kind of like it. So I'm watching this very closely. I'll check the 180, buy the 180, sell the 150, or maybe buy the 175, sell the 145. But it fits the tone that if we get down and we get the big push, and you get profitable long before you get the big push, but if we match that move where this is leg 1, correction, leg 2, that would put us down about 140. So whether I do the 150 or 145, that still should max out profits on that. Again, it's a way to do some portfolio protection, just like I did with IWM. But this Apple move looks exactly like IWM, right? So Apple and IWM, that's big tech, Magnificent Seven, and this is small caps. What do you mean it looks the same? Look at that move. From the top, we had this same type of move. Then we got this correction into the sweet spot retracement, 786, 618 zone, danger zone, looking for the push lower. And look at Apple. Based on this move, look at Apple. Apple's struggling even more. We didn't quite get in the 618, 786 zone on Apple. 618's up here. 786 is a little higher, so it's even less bullish on that pop than IWM was. So again, I can't tell you what to do, but pushing a put spread, a bear put spread out until December, and the risk to reward is beautiful. And this is likely going to come pushing lower into December. If we get the correction we're looking for, it'll be set up beautifully for that move. Food for thought anyway. Okay? All righty. Let's continue. What about Black Gold, Texas Tea, the Beverly Hillbillies? Still looking a little more bearish than bullish because we're just chopping in this zone. So are we going to be able to break above? Well, until we go breaking this swing point, we have major resistance here. And then right above that, we have that 618786 zone all the way down to 0.5 zone. So from that recent high to low, this is beginning to look like we need one more push lower. Just looking at price action. So is this part of that A, B, we go up, get a little C action, then get rejected? So if you're buying this bounce, like we've been talking about, we're stuck between the pink box of resistance and the green box of support. And I said the last several weeks, I would not be surprised to see this keep chopping in this zone. We don't have to go breaking out. We don't have to go breaking down. We could go continue sideways. Amen? And this is looking less and less bullish because we've just been chopping and grinding in the zone. And the more overlapping chopping price action, the more likely we're probably going to get a push down than we are up. And even from that last low, looks like a three-wave up. And this is the beginning of what appears to be maybe a three-wave down, which again, if you do three-wave up, you're doing a three-wave, and this looks like a little A, B, C, and then we get our next leg C, and we continue this chop. We can just continue this stuck in resistance support zone, and we go sideways for several more weeks, maybe even for months. So be careful on these bounces. This would be a perfect buy because, well, you see it bounce. That's armchair quarterback, right? Yeah, sure, you know that. You see two green candles. Well, no, we had this on the software, and we even talked about we could buy that 4-hour reversal. WTI, dailies in oversold territory, reversing. The 4-hour gave us a beautiful hook, cross, slope, angle separation, and it's grinding, but we're already getting back into resistance zone. Prior highs, we're back there. We're getting overbought. I still think we can go higher based on the daily. PAI hook, trend momentum cross. We got slope, we got angle separation. Running into resistance, and my 4-hour made the cycle, right? It made it. So that's what I'm telling you. You should be in a position of authority because we may, with the resistance zone up here, we may get another push back down, and we just keep the chop going. Look at that chop. Massive chop since this move in the Israel bombing Iran scenario. Started to rally on that. Then when they said they're going to cease fire and blew out this dropped, and now we've just been chopping sideways. So the longer we chop sideways after a big drop, maybe we get another drop as opposed to go breaking out. So no matter how you look at it, we're back in overbought territory on the 4-hour. So I would not be going long here expecting this thing to go ripping higher. We're probably going to see a little bit of a pullback coming into this. But Dan, be in a position of authority on this bounce. If we do take out the swing point here, then we're definitely going to go up in here. No ifs, no buts, no ands, in my humble opinion. We take the swing point out, this will continue into this resistance zone. If we can break that resistance zone, and you have the 74 and then you have the 78 up here, But I think if we close above 74, then the higher probability is we go on to 80, 82. And we obviously have resistance here at 78. But once we get up there, that would set the tone for us to go up toward that 90 to 100 zone. Where's the 90 to 100 zone coming from? That comes from the bigger picture when, I got to kind of condense this a little bit for you, but from the prior swing point high to the swing point low, that would give us our 50/618 retracement zone. That's where that 90/100 comes from. But question is this the swing point low, or do we continue this chopping, overlapping, grinding action and we get a push down to 50 area before we bounce? Or are we going to finish it and then we get a push? But either way, you need to be in a position of authority. Bottom line, go back to the daily, stretch that out, zoom this in so everybody can see current price action. We're stuck between resistance and support. If I'm selling, I take aggressive profits. If I'm buying, I take aggressive profits and I'm in a position of authority. If we can break above the 74, we go long. If we can break below this 60 down here, we go short. And everything in between is going to be more of the sideways type of move. Okay? But this bump, and we're struggling at the Magic Fibo like we did last time, what happened? We went lower. So this is why I'm saying, please be in a position of authority. If we do close above the Magic Fibo, then we're likely going to go testing that swing point, a couple of dollars higher. And then if we break that, then we should go up here to the next resistance. But I'm not really expecting this thing to go breaking out right now. All this overlapping, chopping action after that down move, and then we're just going sideways in a chop. We may need one more push lower to give us a new swing point low to then set up a later bounce. But what does the technical picture say? We close below 60, we're going to 50. Got it? We close below 60, we're going down to 50, the low 50/50. That's the plan. If we break above 75, then we're going to 80, 82, 87, en route to that 90/100. In the interim, we don't have to go breaking out. We don't have to go breaking down, but I know the plan. Break above here, we go long. Break below there, we go short. And in the interim, if we're trading this, we need to be aggressive so that we're in a position of authority and then look to take your profits. And if it does reverse and come down, then we can get pipped out for more profit. Or if we're selling and then we go bouncing and we're in position of profit this direction and it goes bouncing and pips you out for more profit. But that's what we call being in a position of authority. So that the trade, if it plays out, great. If it doesn't and pips you out, then you got more profit. But I would not expect that this bounce is definitely, well, we're going to 100. Maybe we break above 75, then I think there's a higher probability toward that 90/100, but that's a long way to go. So again, in closing, we're stuck between resistance, we're stuck between support and resistance. So as we stated for the last multiple weeks, expect us just to grind sideways until price decides to break above 75 to go long or breaks below 60 to go short. Chop. That's why you need to be in a position of authority. What about gold? I warned you about gold, Mr. Tucson. Everybody else, that even though this looked like, woo, we're going breaking out to all-time highs. I warned you when we were over here at 3,500 area, we were due for a big correction. Disappointingly, we got this first move, and I thought we'd reach the Magic Fibo. We didn't quite get that far, but even after that, that looked like three-way, not looking good. But since then, what kind of price action, man? Look at that. Got a nice little three wave, and that's like, sure, all the pundits, gold's going to 5,000. I agree with that, but not now. Got to get this correction over. And even as this started to rally, we pegged this along the way. We said go 33 down to 31.50, then back to 33, and then start to grind. And we came down. I thought we might go a little bit lower on this last move when we corrected again. So a little bit shy what we were looking for, but that's okay. We're still going lower. So my point of contention, ever since this little three-wave correction, we have too much overlapping chopping action. Is that a 1, 2, 3, 4 overlapping and this overlapping and overlapping and overlapping? So all of this, since this what appeared to be a three-wave correction, and theoretically that could have been it, and we go blasting off. But since then, what are we doing? We're overlapping, we're chopping, we're grinding, screaming, this is still corrective, this is still corrective. So what does that look like? We need a new swing point low to come into play. And if you drill down, this is looking more and more like we're going to get a five wave down. So I'm still looking for us to go back toward 3,000 to 2,800 level before we're done. Then what? Buy the dip, buy the dip, buy the dip, back the truck up. Emil, anything below 3,000, 2,800 is a great buying opportunity because eventually we are going to 5,000. And those of you that have been with us for a long time, that's what we love about our service, right, guys? Most of you have been with us for day one. We're celebrating our 15th year of GPA Trading Services. How about that? 15 years already. Wow. But Ian, I think we're going lower. Chopping, overlapping, corrective, and typically you get a 3, 3, 5. So this last push should be a five wave down, and we're working on it. 1, 2. We should get a big push lower in the 3, and then a 4, 5, and that should put us somewhere around the Magic Fibo slash on a daily chart slash this 2,800 zone. I've been calling for it ever since 3,500, still looking for it. So there you have it. I would not be buying gold unless I'm just, amateurizing, buying it every day, a little bit here and there, once a week, once a month, and just holding for the long haul, fine. Because at 3,300 is a good deal. 3,500 still was a decent deal, but after that run, I'll prefer to buy at 3,000 or lower than loading it up at 3,500. And go back in on this bigger chart. This is in the archives. Way back when gold hit this big run up to 1,900, I made a statement. Just like I kind of said, before we break 7, we break 4. Before we break 260 on IWM, we're going to break 160. Kind of made a statement here. Gold is due for correction back to 1,000 area. And once it gets to 1,000, it's going to go up to 3,000. How did you know? Fibonacci retracement extension. Right? That's what it's all about. So after this reversal, when it went down to 1,000, I was a great buying opportunity. Yeah, that was years ago. And sure enough, went zooming higher. Now, current price action, well, that's great, Gary. You made a great call way back then. What about now? We're in it. Since 3,500, I say we're likely coming down to Magic Fibo. We came close. But again, why do I keep focusing after that move? Then this overlapping chopping action that is screaming, Mr. Tucson, we need a new swing point low. Look at that swing point low and look at the Magic Fibo. We need a swing point low. So I suspect we're going to see this thing turn into more aggressive, and we should get a five wave down, which should put us probably by the time 3 finishes, we'll probably be somewhere around that 3,000. Maybe we get our wave 3, then a 4, and then our 5 to get us down to maybe 2,800. It's kind of my sweet spot. but I'm still calling for gold to reach 3,000, 2,800. Anything below 3,000 is a great opportunity to go long. Anything down at 2,800 or lower is an unbelievable deal to go long. And we're going to be shooting for 5,000 the next shot up. And no, before you even ask, I don't mean, well, Gary, as soon as I get to 3,000, I could buy then, and next week we're going to be at 5, next month, next year. No, but will it get to 5,000? In my humble opinion, you betcha. You betcha. Just like my humble opinion, we were going to reach 3,000 after dipping to 1,000. We did it, and then some. Now I'm looking for 3,000, 2,800 dip to then buy en route to 5,000. Any questions on that? So Harold, you can buy it at 33 because when it's at 5,000, doesn't matter if I bought it at 35 or 33 or 30 or 28, etc. But again, I think we're going lower, at least the Magic Fibo. But the key is that swing point right there. We need a new low. Got a beautiful correction. But since then, price action's telling us overlapping, chopping, grinding, grunting, laboring, grind, that we need another push lower, highest probability, before then we can reset to then go breaking new highs again. All right, that's the direction we should be headed. And so far, so good. Even when this bounced again, I was like, guys, I think we're coming back down. This is too corrective and overlapping to warrant this thing blasting off. I think we need the Magic Fibo 3,000 down to maybe 2,800. And I said that ever since we were topping out at 3,500. Need the Magic Fibo. We didn't quite get it. Since this low, overlapping, stating, Harold, we need another push lower. So any rally short term, hint, 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 any rally short term could be looked to be sold because I do think we're going down to 3,000, 2,800. Minimum 3, probably maximum 28. It's kind of the zone. Right? Now, when do we change our reflection on that? Too overlapping, so I would not be surprised if we start to see the high, we start selling in a low, we get a little 618 retracement along the way. High, low, lower high, lower low, lower high, lower low. So that's part of a 5-wave correction, and we kind of drew this out. Well, this looks like after this second correction, we're probably redoing it. So I'll move this over there, and it looks like we're trying to move that over there. I'm trying to get to my green line. I got too many of these on here, but you get the point. Let me click that, see if I can move my green line. Got to move the arrow. But is this the beginning of the new 5-wave? Move this. Move that. Move this. Move that. Could be. Right? So we did get this chopping overlapping. I'm still looking for a 5-wave down. It's possible that could be the one very deep retracement, 2, slight lower high. That works. Working on wave 3 down, and maybe we're already into that wave 3, or this is the beginning of a 1, 2. Then we go down pretty aggressively. But either way, any rally is likely to be sold in the short term. Then after the dip, we get to 3,000 or lower. That's a great opportunity to load up to go long until we start grinding into 2026. Maybe we get to 5,000. Maybe it's 2027. I can't give you exact date or time, but will we reach 5,000 in my humble opinion? You betcha. Are we likely to go down to the Magic Fibo, say the 3,000 / 2,800 zone? That's still the plan. Right? All righty. Silver, I think that's what gold was waiting for. Silver had to top out one more time before its correction. Silver's been on a tear, as you well know. We got a big run up. That does look five wave-ish. So would not be surprised during this correction. Silver comes down toward its magic Fibo. And that's the daily chart on this silver. I like looking at SLV. That's the one I use. And that's what I trade. So, Mr. Tucson, we're likely still going to come down toward this $30 range. So the key is on silver, I'm looking for this push lower. And when gold gets down to 3,000, 2,800, which I believe it's headed, I think silver's going to pull back toward maybe the magic Fibo around 30. Anything 30 or lower is just back the truck up steal of a deal, then go ripping way higher. And if you look at silver from the big picture, actually, you can probably do it from this weekly. We've been talking about this for quite some time, and we're going to reach $60/$70. No ifs, no buts, no ands, no exception. Again, that's in my humble opinion. This is a given. And we had a comedian, chef comedian, Justin Wilson. He was famous for his "I guarantee, I guarantee." Well, there are no guarantees, but in this case, based on the technical picture, I guarantee silver is going to reach 60/70, and that's conservative. So I want to see the correction down about 30. Anything 30 or lower is like, man, like when silver hit down here during COVID. I was like, man, you better be buying silver. It's going to go ripping higher. This is an overkill. And we still haven't reached our extensions yet from the high to the low. But this is why we're going there. Look at gold. It not only reached its extensions, right, made new highs, but it's blowing past the 1272, 1618, 272, 2618, and higher, right? We went to 3500. So look at gold from that same high to low, reaching the 2618 extension. Well, just feast your eyes if SLV decides, well, I'm going to catch up with gold one day, and I'm going to reach toward my 2618. $500. Is that possible? You can make $500 on a move? Could silver reach 500? Yeah. Think about it. Silver is a finite entity. It's not unlimited silver out there. With quantum computers, they're going to use a ton of silver. With AI, they're going to use a ton of silver. With electronics, chips, I mean, silver's in everything. I don't think anything, computers, you name it. So with the big push for AI and quantum computers coming, all of that equals silver going to the moon, Alice, to the moon. So I'm not trying to tell you, I guarantee silver's going to get to 500. But all it's got to do is start catching up with gold, and we'll be reaching our 60/70 target, which is a gimme, guaranteed kind of gimme. That's why I say it's conservative. Look where the 1618 is, 119. And Emil, we could be buying at about 30 when it retraces, or even at 34 right now to go to 60/70. That's a double. And we go up here, that could be a quadruple, 30 to 120. I like it. So yes, I'm extremely bullish silver. Way bullish. Years to come. So I'm looking for that dip down about 30 or lower, and then look out. Is it going to be the end of 2026 we're up here at that 60/70? Could. It doesn't take long. When silver starts ripping, it doesn't take long to get there. So be careful. Short term, we've been on a tear. Zoom in. You can look at that big run. It is impressive, to say the least. That big run up was very, very impressive. Yep, extremely impressive on that run. From the recent high to low, we hit the 618, 786, even extended to 1618. So typically after you do a correction, trend continuation, you typically need a pullback before the next continuation. So you can use this methodology, rinse and repeat. We have a high. We're looking for a low to come in at 30-ish, maybe a little bit lower, but I would think at least a visit of the Magic Fibo, and then you're going to have a high, you're going to have a low. When we start closing back above, for this example, we come to the Magic Fibo to bounce. We start closing back above that 34 to 35 range, 618, 786. Then what's your targets? 36, 37, 39, en route to what? 60, 70. How soon can we get there? That 60, 70 guarantee price? Maybe into 2026. Could be sooner when it gets going, but we certainly need a correction. And again, look at price action. That looks 5-wave-ish. Right? So we need some sort of 3-wave correction in here. Set up the next big 5-wave run. And I think that's going to get us to our 42/47-ish range on that next bounce. So what I'm looking for is coming out of 30 or lower. Then the next rip, by the time we get a 5-waver in there, should be somewhere between that 42 to maybe 50 area. Then probably correct off of that to then do the next push into that 60, 70 range. Again, how long is that? Maybe, I don't think it'll be this year by the time that happens. Anything's possible, but that's why I buy shares of SLV or buy silver bars at Costco or however you want to do it. Roslyn Capital. Hear that on TV all the time. Roslyn Capital, buy gold and silver. However you want to do it. But it's definitely going higher and it's a great investment. Can't stress that enough. Let's continue. What about Bitcoin? I still think we're probably going to get one more push, not up, a correction push before we go blowing off. But remember last week, I talked about the same kind of thing, Harold, when we were looking at this. This looked like 5-wave down, and this looked corrective, and we needed a new low. And I said, this is likely we need a new low here. And I said we would likely push toward 114 right there. ABC pattern expected to dip to about 114. And sure enough, price action is spot on. Come back to Bitcoin, and we dipped right into the 114-ish area, reversed. So what's next? Either, well, we got a couple of things here. A, let me stretch this way out so everybody can see it real easy. How right now we got that low, which I was looking for. Now we got a high and we're pulling back from. So this is critical for us to hold. And that is this 618, well, actually from this 0.5 down to 618786. So the trifecta, 50% retracement, 618 retracement, 786 retracement. So if this holds and we correct in the here to go blasting off, great. But if we don't hold that, we start closing back below 15, then I'm going to look for a new swing point low, which would put us down here in 113, maybe that 112 level. And last week's conversation, I said we need to get at least to 114. And if we start getting anything lower than that, it would be a shame, right, Emil? We didn't go to 112. We still might get it. So I'm watching this correction right now as it's coming back down. If we don't hold this green box and we start closing below it, then that's screaming we need a new swing point low. And that puts us into the 113,000-ish range. And typically you can extend toward this 112 level. And this would be ideal. We get a correction down in here to then we go blasting off to our 150, 175 target. So come over here to NinjaTrader. It's part of our software. What we've done with NinjaTrader is we have the same Fibonacci retracement extension levels in here like we have on that charting platform. So this is part of it. You got the extension, you got your retracements, all that in here. So that Apple trade, we got the high, we got the low. We're grinding in this 50, 618, 786 zone. So all of this is that resistance zone, 50 up to 786. And it's been struggling in that zone. So this is why we're looking for a push lower. And we're targeting somewhere around that 140-ish level. So I did mention buying a put spread as a potential trade setup. The risk to reward ratio is great. Maybe you buy the 180, sell the 150, buy the 175, sell the 145. And we should see if this plays out to December. That gives us plenty of time for this correction to come in. And this looks like leg one, correction, leg two. After all, look at Apple. 1, 2, 3, 4, 5. Well, you don't have a 5-wave correction. That typically means, right here, everybody's on the same page, that is very likely the A, and all this chopping overlapping looks like the B, and we're due for a push down in C. And I think by December gives us plenty of time in that put spread. So I'm looking to, and when I was looking at it earlier this morning, somewhere around buy the 180/175 and sell the one. If we do the 180, maybe the 150. If you do the 175, then we do the 145. And it was roughly a couple of $100-ish of risk to make a 10x type of return. So somewhere in $200-something risk per contract to make over 25, 23. So about a 10xer on that. Not too bad. Again, it's insurance. So if we do get the correction and this price action plays out the way we believe, we have a very good chance that Apple's going to go down into the end of the year. To finish that correction, then we can look for something else. But this definitely looks bearish from the high to the low, 5-wave down. That's not conducive to being a bottom reversal breaking out all-time highs right now. It's conducive to do the leg one consolidation or an A, B, C type of move. Amen? All righty. But it is available in the software. We got all the extra tools in here. And yes, we have the trade management system in here. You go under strategies and you can see under MPA strategy, we got our breakout pending. We got our trade management system, and you could do the instant order just like we did over here in MetaTrader, where we have this ready to trade mode. You could do the exact same thing in NinjaTrader. How about that? And you would set that up, click that on there, you set your parameters, you go down here and say enable, down here, enable, and then once all that's enabled, you're good to go. All right, you got to add it to your chart, and then you can set all your parameters. So with that, still looking and closing on the conversation with Bitcoin, would not be surprised, Harold, we get one more dip. And if we don't hold this to go bouncing to break out, then we're likely going to make a new low below this 114 that we were looking for last week. That looked corrective. We needed this. Now, is this now the 1-2 and we go blasting off? Or is this yet another? We start closing below that, say, 16,000, 116, 115-ish upper 115, 116,000 right there, then we're likely going to make another swing point low. And if we make the swing point low of that 114, then I think a good area to look for is that 113 extension, followed by probably this 112, which would be the breakout, where we test, and we finally broke out, get a correction, a retest before we go blasting off. So A, if we close below this 115.8, 115,008 area, then we're likely going to make a new low below this 114. Got it? And then what? Look for blast off going into the end of the year. The plan is to, as you well know, go up to 150 to 175 by year end. Amen? Next up is Ethereum. Ethereum's up here, kind of after this big run up, we need some sort of correction. And our ETHU is doing very well. Here, I'm still looking for some more upside, but we're likely going to get a little correction in this. So I'm looking for, we get to 4,000 again. I think we'll be up close to this 160 level. We're not quite there yet, right around that 37-ish. After the big run up, we need a little correction and then probably one more push. So the plan with all my crypto, including Mara and BTBT and all the things we own, I'm looking for when Bitcoin gets to 150, 175, I'm going to sell my Mara, my Bitto, Riot, whatever you might have, BTBT, et cetera, et cetera. And the same goes with Ethereum and my ETHU that's been good to us. When it was $4 before the splitsy down here, when it was 4, went up to 12, took the profits. Then we talked about buying the next dip. And so far we got down in the 20s. We went up to 120, a big, beautiful run. I don't think this is over. I think we need a little correction and a continuation. But the goal again is I'm going to unload all my shares when Bitcoin hits the 150, 175 target. I'm going to look to unload this as well, but I would not be surprised to see it upwards of 160, maybe 200 zone. If Ethereum can break out, which, let's go back, it's been underperforming, kind of like silver to gold. Ethereum is to Bitcoin. Bitcoin's been blowing past all-time highs, and Ethereum has not made a new high. So we got to go out to like a weekly. We can see the prior price action, and we have not broken all-time highs yet where Bitcoin has, but we've struggled around that 4,000 area. But if we break it, then that sets the tone. Let me try a 3-day and stretch this out. That sets the tone for us to make a run and break new highs, which would start targeting right around 5,000, 6,000 range. If we can break the prior high, we got 53, 58 on that scale, high, low, broke the 618, 786 zone. So the probability we end up going up to this target before we're done still looks pretty good. And just be careful. We probably need a little correction before we get the next push, but you know the plan. Bitcoin hits 150, 175 or higher. Then I sell my Mara, my Bitto, my Riot, whatever you own in that arena, which is in this area, Mara, own hundreds and hundreds and hundreds and hundreds of shares of that. BTBT, hundreds and hundreds and hundreds and hundreds and hundreds of shares of that. And these have been good to us, so we're not done yet. And then we go from the big picture on Bitcoin. We know the rinse and repeat type of scenario. The blue lines are the crypto halvings every 4 years. Every time a crypto halving, Bitcoin goes on a 12 to 18 month run. Then we get crypto winter low. Then we go to the next halving. We start rallying into it, 12 to 18 month run post halving. Then we get a crypto winter low. So we already know on the chart, buy low, sell high. So back in 22, when we bottomed, I kept saying Bitcoin below 20,000 is a crime to be able to buy at that low. It's a steal of a deal. And even when it was at 25 to 30,000, I said Bitcoin below 30,000 is still a steal of a deal. Well, in late 2026, based on this peaks, post-halving, 12 to 18-month peaks, then you get the winter lows into the next halving, 12 to 18-month peaks, winter lows, 12 to 18-month peaks, winter lows, and it happens over and over. We topped in 17, we topped in 21, we're topping in 25, hint, hint, hint. And then we did these crypto winter lows in 18 and 22. So we're expecting to do it again in 2026. Rinse and repeat. So look for this to go up to 150, 175. At some point, we're going to get the crypto winter low. And I'm kind of targeting based on where I think Bitcoin is going to where Bitcoin's correction should come down. So just like I said back here in 22, Bitcoin below 20,000 is an unbelievable opportunity. Well, we get Bitcoin below 50,000 in late 2026. Perfect time to nibble zone, buy, and start establishing a position for Bitcoin then to go into the hundreds of thousands, 12 to 18 month post halving in 2028 would put us in late 2029. So it's like a 3-year investment. Buy in 22, sell in 25. Buy in 18, sell in 21. Down here was a 18 here, buy in 18, sell in 21. So we're going to what? Buy in 26, sell in 29. Amen? All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. I am long IBIT, obviously, and even have calls on IBIT. And I suspect as we move through the next few months, just to bring this into play, I do think this baby is going to go higher. We did from the recent high to low. We reached our extensions. Most recently, this high to low, we reached this extension. So I do expect probably the correction. If Bitcoin gives us the correction we're looking for, IBIT's going to give us another correction. Then we can look to buy the dip for the next surge higher. But when Bitcoin hits 150 to 175 target, this IBIT would probably somewhere in the 80 to 100 zone. It's kind of the plan. Shorter term, you simply do the high to low. You break the 618786, you go to your 1272, 1448, and 1618. We reached it. We got another correction from that high to that low. We broke the 618786. Where did we go? 1448, 1618 area. So we still haven't reached the 73 yet, which that's still a high probability. That high to that low broke the 618. We did reach the 1448. We did reach the 1272. You can't really see it there, but that little line is exactly where we reached. And we're still likely going to continue higher towards 73. Look for a correction. Look for the next extension. But like I'm saying, I don't think I see any issue at all when Bitcoin hits that 150, 175. Where should IBIT be? I'm thinking at least 80 to 100 range or higher. We shall see. The bottom line is I'm going to sell my IBIT when Bitcoin hits 150, 175, and even my call options I have out. I got some stocks, obviously some shares, and some options on this. I do expect this to go higher. But look at that push. As Bitcoin started to push, IBIT followed. Amen? And you can't make this stuff up, right, Emil? When this first came out, we talked about this. We did a beautiful, Emil, 618 retracement. And after 618, 3-wave correction, where were we going? 1618, 60 bucks. That was kind of the plan back then. Got it? Another correction, and the next move up toward 80 to 100 zone. So again, Bitcoin does its correction, IBIT's going to correct, and then when it goes ripping to 150, 175, I'd be very surprised we're not in the 80 to 100 zone or even higher. So with that, take care. God bless you. We love and appreciate you. And as we like to close, that's it. That's all. We'll see you tomorrow.